What's up, everyone? What's up? What's up, everyone? Give me 1 sec. I'm gonna go live everywhere. I'm back from my business trip. So, morning, guys. Give me 1 second. Need this thing.
What's up? What's up?
All right. Where's this thing? Give me 1 second, guys. Finishing setting up, and then we can rock and roll. Okay. Let's see. I'll just give a couple of minutes for everybody to come back. I'm sorry. To get here, and then we're gonna start. Give me and set up Discord, Schmisscord. How's everybody this morning? Every time I leave for a vacation, all hell breaks loose, so that's very typical. Let's take a look at gold. Wait, let me go live first on the Discord. Where's this thing? Where is you? Almost there, almost there. All right, gold is ticking down prior to NFP. We have 10 NFP in 10 minutes or so. Unless you're in profit, you should not have positions. You shouldn't be putting on positions at this time. Let's see. One second. Discord. Yep. All right, Discord is fine. 1 second. Almost there, almost there. All right. Let me see how many. Okay, people are joining in. We have NFP today. Let's see the numbers. What are we looking at? Let's take a look. We are looking at, what is this? So we're looking at, just put this here. We're looking at, okay. So 159, ADP, which is non-governmental one, came in and said basically that the numbers were low in private sector. So I think NFP might be, I don't think the forecast, I don't think we're going to beat the forecast, to be quite honest. At best in line, most likely we'll come in short. If we come in short, that's probably going to boost the markets because it gives the Trump case for cutting rates more reasons to do so, given added to the uncertainty of the markets. We 1 second. 1 second, guys. All right. So given the, I think if we're going to come in short, the markets will actually, they probably will dip first only just because of the bots and the algos trading, but then it's probably going to catch a bid. I'm looking to get long Nasdaq around these levels right here. So maybe a wick in and then a turnaround. We'll see. Might be a decent play for me. Let's see, futures. Where is ATR? Why isn't it? Okay, yeah. So basically at 50% retracement, we might dip a little lower, all the way down to 618 if everything goes to shit. We are already down what? Well, nothing serious. But yeah, I had this on since the beginning of the week. We thought that we're gonna wick in and turn around. So honestly, maybe a better, basically retesting. So this was a wave one, wave two. This was an extension, another wave up. So basically, if we look at the weekly chart, this was one wave. This is another wave. So basically, retesting this high here, as in breakout retest continuation. Okay. So that's the idea. Confluence of the support level on the weekly as the beginning of the down candles here. So this is a weekly order block and 50% retracement, and we have this 55 EMA. Every time we approach it or touched it, it's right here right now. So it's coming in. So you have a triple confluence. That's not a bad level. Obviously, it's news dependent, so you shouldn't just leave an order here now. And daily ATR is right there as well. So that means that the usual amount of the last 14 days of volatility usually ends here. So given that today's Friday, I think that's probably quite a good support level to trade. Plus, right below the 20,000 level, right? So let's see. On NQ, it is around. It's a little lower, yeah. So right below 20,000, 20,000 probably going to be a big support number. So for Nasdaq, that's my game plan. Obviously, the trend is currently short-term trend is down. I think we've went down about 10%. Yeah, 10% down, which is the definition of correction. So when stock market goes down 10%, that's the official kind of definition of the correction of the market. So 10% down. So we are now in a corrective territory in Nasdaq and probably other stocks too. It's S&P. Let's see. No, S&P is still fine. So tech is correcting because, well, the Trump not shenanigans. All the tariffs, a lot of uncertainties sipping through the market because of the political headwinds, so to speak, or rather tariff talk. Because if the world is becoming decentralized, a lot of international money will be leaving United States as well. So that's why people are pulling money out, closing their positions. And due to uncertainty, you don't want to be long high risk stuff like tech stuff anyway. So that's why you have a little bit of a risk off due to all the tariff talk. And everybody's kind of like want to sit on, take money out of the market just to see what happens and then get back in. So that's fine. But for a day trade, I think picking up Nasdaq at these levels is fine for me at least. Anyway, gold. Let's take a look at gold. We'll take a look at the spot first, and then we'll take a look at the. Okay, we got 4.5 minutes. Oh shit! I'm looking at the. I forgot to turn off the. Oh shit! The news. I'm doing the analysis with watching with the news screen. My bad. Fuck. There we go. All right, so Yeah, let's go back to Nasdaq real fast because I had a screen on. Anyway, so 50% retracement with the daily ATR average true range with the weekly order block with the 50% retracement with the support. Basically, I think that's a pretty and the moving average value area. I think that's a pretty decent area to go long at least today. Like I said, I expect the number to hit lower than expected. It's just my guesstimate. It has nothing to do. We'll see the number obviously, but I most likely, if in line or lower, that gives some ammunition towards the argument that the Fed will have to cut rates, and the markets are already starting to price in that the Fed will be cutting rates from 2 to 3 times this year. They went from 2 to now 3 times because Trump will pressure Fed, number one. Number two, given all the tariffs volatility that's causing volatility in the markets and the uncertainty with the risk of price action, we are now seeing that basically is what, one sec. Yeah, that's what we were seeing right now with the market being sold off. Anyway, so this is a good area, value area for me to attempt the longs with the jobs coming in a little lower. We have, oh wow. NASDAQ will soon offer 24-hour trading on its equities exchange per Bloomberg. Wow. Okay, finally entering the modern age with 24-hour trading. Okay. It was kind of, well, it was kind of good to have the 9 to 4, 9:30 to 4, because it gives you time to have life with the 24-hour markets. Especially Forex was the first 24-hour market 6 days a week, then King Crypto 7 days a week, and now with stocks joining that party, it's gonna get more demanding, so to speak. Okay, so plus you also had patterns of trading because of most volume gets hit. You have obviously when you have a stock cash market open at 9:30 in the morning, you have huge volume hit the markets, and based on that you can take certain trades. Anyway, now it's probably going to change the game a little bit. Well, this should be interesting. All right, let's take a look at gold. Gold missed my entry yesterday, day before yesterday. I was by 0.3. I was my entry was a little lower and then it took off. I didn't trade afterwards. We're in a ranging market, so there's no direction right now. We're consolidating. So I wanted to dip a little lower to get long. So again, if you fib it, 50% comes in around these levels right here, daily ATR right here. So 1/3 here, 2/3 here for the day trade to get it back up. Plus you have an inverted head and shoulders. Not that I trade them, but it's there, a V-shaped recovery for now. So a nice dip would be a wick into the deep pullback, and the turnaround would be my ideal scenario. Again, I trade conservatively. I don't need to jump on something that's already moving. I like to get wicked into trades because the market is basically a low-hanging fruit, right? Like I always been saying. All right, we got like 1 minute till the rock and roll. Less, a couple of seconds. Let's see. You're gonna see the. Let's go to euro dollar. Okay. Euro, boom. See, pop the stops prior to news just to fuck with everybody. And now we're rallying. Okay. February 151, expected 160, so lower than expected. As expected. Okay, so the dollar is going to get slammed for a little while. Let's take a look at the gold popped. Always remember, by the way, and you see markets are popping now. Fuck. Wish it would be wicked in, but anyway. Remember, during NFP, we always have two two things happen. We have initial reaction, which is news reaction that is traded by the algos. Then you have the opposite reaction once the algos are done trading. You have a reversal, and then the third move is the one that you throughout the day, because then you have a 9:30 open cash market. That's the one that's going to probably be the actual move for the day. So don't hop in. As many times I've shown you, you have essentially they probe the ranges. Then they're gonna probably probe the low of the range as well, just to stop out all the weak hands. Okay, so because people now they want to trap somebody. People who were short now. So before, when this chart looked like this was the low, right? And people who saw that we took out this low right here, right? They this low right here. When this candle took out this low, a lot of people started shorting, and their stop losses are where? Right there. So that's why you don't trade prior to the news, because all of these moves don't mean shit. Okay, so you had a breakdown with a solid, nice candle. A lot of people thought, okay, let's. They FOMO'd in essentially, and their stop losses were where? The liquidity was about these highs, equal highs here, blah blah blah. Right, so the market makers immediately popped the stops, and that's all she wrote. Okay, so people who were impatient, they just lost money. All right, let's take a look at the unemployment rate. Also increased, so that's good. Well, good in the sense that this is giving ammunition. That's why the markets rallied, even though the news were bad for the economy. I've explained to you why the markets will perceive it as positive news, because it gives Fed the reason to cut interest rates right now. Okay, so that's why you have to understand the context of macro environment, and not just trade. Oh, this is economy is bad, then this is bad, et cetera, et cetera. You have to have a little more deeper, nuanced take on markets if you want to be trading news and stuff like that. So usually I would recommend for newbies not to even touch the not to engage into trading NFP, because you have a lot of volatility, you have a lot of shenanigans going on. So it's really not a good time. It's an easy day to lose money. Let's put it that way. Okay, let's take a look at the dollar index. So dollar index, classic. Absolutely fucking classic. So this is the low prior to the news. This is the high prior to the news. The market makers did what? They trapped the people who wanted to go long. They trapped the people who wanted to go short. And they just ran the stops, essentially. The stop losses were here and here. People who were long, they got popped here. People who were short, they got popped here. All right? And now we're in the middle. That's just market makers grabbing liquidity or taking your stop, not your stops. Nobody cares about your stops. Other big traders' stops, who were impatient and who were doing stupid shit. Let's put it in the technical terms. All right, so now the dollar is getting squeezed, getting sold, offered. We are coming into some. Wait. Let me put some fibs on this. So what the hell am I looking at? Oh, this was weekly. Okay. Yeah, so when we were here, okay. Wow, it went exactly to this and sold off. This is unnecessary anymore. Not necessary, rather. Okay, let's see when we're going to have some dollar support, if we're going to get a dollar support. What do you do in this scenario? First thing you look at is obviously the fibs. That's what and see where we're going. So next level for me would be this level right here at 702, a midpoint between 786 and 618. My deep pullback value area, love trading it. So obviously euro dollar is very similar situation. If you fib from top to bottom, 702 comes in here. I would be. I think that the euro should be topping by 110 should be a hard sell. You should just sell the fuck out of euro at 110. If we keep going up, especially today, I would sell 110 easy because vertical price action never lasts. Okay, you're gonna have a pullback. This is way. This is rallying on the fact that Trump told Europe to go fuck themselves and go spend money on your defense, and Germany is now going to be spending more money, trying to unshackle the constraints put by European Union on the on spending limits, and they want to increase the spending limits to start pumping more money into defense, which is positive for European stocks, but it shouldn't be positive for euro dollar. Why? Well, because the money doesn't. They'll have to print money in order for to. It's not like these money. They will have to increase the money supply. By increasing money supply to pay for all the bullshit, they will have the value of the euro will go down, based on that. Is my thesis. So that's why 110-ish, I think, vertical price action into 110, sell. I'm swing trading this, so you can layer in multiple trades for swing trade. I think, especially if we take out stops or if we pop this level right here, I think that that's going to be. Let's see what. Futures markets, for fuck's sake. There we go. So if we pop these levels right here, today it's going to be a wick out into 110 or approaching 110. There's going to be a lot of sellers at the figure. So I would be quite interested in selling 110s. Easy peasy today. All right. NASDAQ. Let's take a look at NASDAQ again. So daily is anemic for now. Again, we've popped the stops, and we're in the middle of the range because on one hand you have negative news. On the other hand, like I've explained to you, you have on the other hand you have the stimulus, incoming stimulus, and Fed now having reasons to stimulate the market. All right. Gold is not flying. Gold is in the middle where it stands. I told you it's going to pop. It's going to trap traders. That's what market makers do. They don't want you to, well, it's not you. Again, it's not to do with you. It's, they're they're basically, they want to trap unsophisticated traders, big traders, institutional traders too. But now you have what? You have people trapped who wanted to buy the breakout. The algos who bought the breakout. Okay, oh, we're rallying. They FOMO'd in. And now they're underwater, right? So that's what market makers do. Algorithms or in person, doesn't matter. So, and we're in the middle of the range. I'm not saying that we're not going to go up today, but you shouldn't be... you shouldn't be buying breakouts just on the news itself, because more times than not, as I've explained to you, you have three-pronged moves during the news cycle. It's first move, obviously the initial move with the news that are a nanosecond algos are trading, and you shouldn't be even in that touching that. Then you have profit taking. This is what you're seeing now. They're reversing. Sometimes they go to the other range extreme to just stop all the breakout traders, and then you get the real move, right? So that's what. That's why you don't go with the initial move. That's a rookie mistake. More like that. This is why you have this range on NASDAQ. Basically, they pop the highs, pop the lows, which was the low here, right? And now we're in the middle of the range because the market hasn't found its direction yet, even including gold. So it might rally. There is a bullish case for gold, obviously, because if Fed will be lowering interest rates, then the yield differential between the US dollar and the gold is gold positive, number one. Number two, inflation is coming probably, pardon me, it's an inflationary move with Fed cutting interest rates. So the value of the dollar will be going down again. Thus, gold is being an inflation hedge. One more time, is gold positive. Okay, so the question is, do you want to buy it at the range top here like a retard, or do you want to wait and be patient? And you might not get the opportunity for a dip until next week. Maybe a good setup will be, it maybe rallies today. Monday it retests this, and then it goes up, right? So I'm okay waiting till Monday and buying it right here. Okay, once I see a nice candle with a wick right here, and we take out the candle high and we go up, that would be my trade. And I don't need to risk my capital like an idiot, because just it starts breaking out, and then it fades, and it takes out these lows before it goes back up. Okay, because I've seen it thousands of times, and I think last couple of weeks when we were doing the lives last week before I took my when I went on the business trip, I've shown you plenty of times where the markets first they stop everybody out, and again, it's not your stop losses. That's where a lot of stop losses are on the institutional level as well, and they take out their stop losses, and then the market goes into the direction of the trend. Okay, so I don't want to be buying the breakout here, because a lot of people who thought this was the high, right? Then this candle looked mighty bullish at some point. We took out this high. They bought that breakout, and look what happened. And they got stopped out right here, right? Because this was the low then, right? They get stopped out, and then the price starts moving back up. And they're like, oh my God, why is it happening to me? Markets are so unfair. Because you're an idiot. That's why. So be patient. Even it doesn't mean you're not going to be having trades every single day that are A+ setups. Okay, forget that. Forget all that bullshit you see on YouTube or whatever. You don't have A+ setups every single day. You have to find your bread and butter trades that work 70% of the time, 60% of the time, and take them when they set up. Okay, don't just trade because today is news and today's Friday. You need to you need to work, you need to do something, you need to hustle. No, you don't need to fucking do anything, because you doing something will cause you losing money. So if you want to do something, it's just sit on your hands and wait for a proper setup first. Now, another trick, 1 second. Another thing you should be doing is always watch correlated assets, right? Are they moving in tandem? So gold is plus 0.4 while silver is down 0.4, okay? So I want these things to move in tandem, because when there's a disconnect, then there is something, there's market uncertainty, and it's not really, you basically want to have as much oomph, the power stacked, probability stacked behind you in order for you to take the trade into the direction where you want to take the trade, right? So you want to watch correlated markets moving in tandem, because that's when you see because a genuine powerful move you see across the board, not just in one particular area, okay? So when silver is down, gold is up, it's not the best scenario for me to get long gold. So if you're trading super short-term time frame, obviously we just had a little retest of this area. It's a visible order block on 1 hour right here, right? We missed it by a little bit, but right here it actually shows properly. On the 15-minute time frame, you had wave 1, then pullback, another wave, and retest into the zone right here. So that's kind of like what I was explaining you, I was looking at the Nasdaq. In Nasdaq, but on a higher time frame. So same area. See this? Wave one, retest, continuation. That's what I've been waiting for all of this week, and this is an example of it on a 15-minute time frame. See, same fucking pattern. Wait, what was I looking at? Gold. 15. My bad. There you go. So same thing. See, it retested the zone and then it rallied. Again, we're not closing above though. So, but this was you should have been taking profit here anyway. So exactly same setup, but on different time frames. That's I didn't see the gold one until now, so I missed this one. But on the higher time frame one, it's the same principle on the Nasdaq, okay? Because the fractal nature of the markets. All right, let me see some questions. All right. So the euro dollar question, overstretched, overbought. So any vertical price action is an unsustainable price action. Okay, it's the currencies are not designed to move 5% in a week or 2 weeks time. Okay, because currencies are a mechanism for stability. Because if, let's say, you're a Toyota corporation, and you're selling your Toyotas to United States. Imagine the volatility of the rate differential between Japanese yen and US dollar goes 20% like Bitcoin, 20%, 30% every week. Your profit margin on the car is what? 10%, about 10%. So if the volatility of the currency is going to be so unstable that it's going to be shooting up 10, 20, 30% every few weeks, you won't be able to do business because it will just eat up. It's more. You obviously you can hedge, and they do hedge it, blah blah blah. But the point being, it's very unstable. When you want stable currencies to do business, because otherwise, one swing, one direction, and 10% of the value that eats up all of your profit margin, just like that in 1 week. Okay. Meanwhile, you were building the plant, and the large businesses won't be able to operate internationally if the currencies will be swinging 20% every other week. You know what I mean? So that's why currencies are designed to be stable. And when you have a very one-way traffic type of move that lasts a week or 2 or 3, usually it corrects because it's an unsustainable move. Okay, and everything moves in ebbs and flows in markets. They're in waves, so there's always pullbacks. We haven't seen a pullback after a very vertical move, quite vertical move. There's zero pullbacks in here pretty much. So I don't think it's going to be, knowing again the power of the 110 being the big number figure, given that it's Friday, meaning for the last 2 weeks we've been buying until now it's Friday, and giving the geopolitical uncertainties, blah 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 blah. I don't think a lot of traders will want to hold trades over the weekend, and rather will take profit that they've made being long in this euro dollar, and then re-enter the position on a Sunday open or Monday. Okay, instead of waiting, or instead of not closing, not taking profit, and then because some weekend news, when this is not being traded, you might have a gap down open right here. So you've essentially given up all this just because the upside is limited after an extended move, versus a lot of professional traders will take profit for the weekend, just not to have a weekend exposure. You don't want to have weekend exposure when you're already nicely in profit. You can close it and you can re-enter on Monday or Sunday. Why expose yourself to having a headache and then Trump or EU leaders come out and say something which will throw a monkey wrench into your into your trade, and you will be essentially you can give up a lot of profit for no reason. So might as well just take profit now. Wait for Friday. Most professional traders, by the way, uh, don't trade Fridays. Okay, I know a lot of big traders that stay out and mostly trade Tuesday, Wednesday, Thursday. Okay, Monday is the setup day. You kind of gauge what the hell's going on. Tuesday, Wednesday, Thursday is when you make the bulk of your money, and Friday you take profit. You do a little bit of trading, but it's best to stay out because you have the profit trading. You have the profit taken into the weekend. Remember, London and EU traders will be closing their positions at 11 a.m. and in 2-3 hours they'll start wrapping up for the week. It's beer time, so why hold the positions over the weekend? Okay, obviously you have indicator, but this is my momentum indicator. You can see that the momentum of this wave is clearly not as strong as previous momentum here. So you have a divergence. Obviously the RSI is showing you divergence as well. I'm not a big divergence guy on the trending market because the divergence can stay there for a while, but it's there. Okay, it is there. So I'm not gonna just ignore it. It clearly worked here at the bottom, right? So it is a strong move, but given that it's Friday, given that it's a very vertical, unsustainable move, usually these moves are met with correction. And then it's your job to see where those corrections should be. And usually they are, I'm just waiting for seeing where the pullbacks will land. Anyway, so usually vertical moves do not sustain for long. When this was crashing, then you get this. Let's take a look at any vertical move. So here's a vertical move, similar, percentage wise. Let's see. This was only a 2.5%, whatever. Come on, 2.5% vertical move with a 50% retracement, essentially, right? So quite possibly this is why I have my fibs here. This is a 5% move, which is quite unusual for 4.5% move. So a 50% retracement into this breakout, into the zone right here, I think is quite possible in the coming weeks. All right, with the divergences, with the vertical move, this is why I'm favoring for euro dollar shorts, especially at the 110 level. I do scalp, but rarely because I have to run multiple funds and I simply don't have time to focus to scalp that in a scalping meaning sitting on a 1 minute or 5 minute charts. I just don't need it anymore. Not anymore, but I simply prefer higher time frames because they're still going to give you a setup and I'm still going to be making money without me needing to dedicate as much time towards it. So swing trading for me is a little more palpable for my schedule. When I was younger, I used to obviously scalp, and I would spend 18 hours a day staring at the screens just like everybody else. Not scalping for 18 hours, but scalping is, again, especially novice traders, they make that mistake because they want everything fast. They don't have no patience. They have no discipline. So they sit on 1 minute charts and they start scalping. And most of your scalp, you take 25 billion trades and you have $3 worth of profit after 3 quadrillion trades. Okay, it's basically you're spinning wheels in one spot instead of you just simply not gonna get A+ setups every fucking 2 minutes. So to me, I I found it's just a lot better to be patient. 1 hour time frame, 15 minutes, 4 hour, give you plenty of opportunities at big levels. Because again, institutional level traders, they look at big levels, which are daily, weekly levels. All right. This is why you have reactions from daily levels. Okay, to this day, support, resistance, all that bullshit, it works on daily levels because that's where all the institutional big players sit. Because they operate with billions and tens of billions of dollars, if not trillions. The market, which daily volume of a Forex market is what, $6 trillion a day, $1 trillion, right? So this is why to absorb all that volume, you're not gonna have liquidity on the 1 minute chart when you need to sell $1 billion worth of X currency. So the analysis usually is performed on daily levels, key levels, and once you identify your daily levels, weekly levels, 1 hour time frame gives you plenty of reaction from these levels for you to make money. And that's what I prefer instead of sitting on a 1 minute chart, which because this gives you higher probability, higher accuracy. 1 second, bonds. What is it? Bond yield. Yeah, I'm watching bonds, U.S. bonds. Anyway, this higher time frames give you higher probability setups overall. They're less noisy. Okay, so why am I gonna sift through all the 1 minute nonsense when 1 hour will give you plenty? You have an endless amount of instruments. So just pick, take your pick at the at which one you prefer. Again, look at the correlated regarding the euro dollar. Look at the correlation of other currencies. The pound did not make a new high like euro has, right? So euro popped this high right here. Right, pound, nope, didn't get so high, and it's rolling over. Forget about Aussie and Kiwi, same thing. It's been rolling over already, so it's just a matter of time for this correction to start. If pound, Aussie, Kiwi are all confirming that the dollar, that the rally that occurred in the last this week, so to speak, right? So since March 3rd, Monday, right? So we started rallying on Monday, and today's Friday, and obviously Australia, to all our difference, it's already nighttime there. So they've taken their profits and they fucked off into the sunset long time ago, right? So same thing here. Again, big level, Kiwi already correcting this leg up. So given that it's Friday, given all the information that I've provided already, it's just a matter of time before this corrects, and then it can keep going up. Maybe not, but the chances are that with everything else correcting, that this is going to be correcting as well. All right, so dollar yen is getting slammed into a very nice level, by the way. So 618 probably going to have a reaction. Aussie, New Zealand. Yeah, okay. Dollar CAD. A second. Oh, see, the dollar CAD is rallying nicely. There was probably some Canadian news that came out. That's why you're seeing this. But so you can see that the dollar max is rallying. South African rand, dollar is rallying against South African rand. So this is why you watch all currencies. So if you have a position in your dollar, you don't long it here like your dickhead, okay? Because everything else is going against the U.S. dollar is going up against everything else, but the euro dollar, right? So going long when everything else is showing you the opposite is quite stupid. Okay, so if you want to be long euro, fine. Then wait for the correction to be over in the dollar, in all the other pairs, to confirm that the trend against the dollar has resumed. Okay, but for now, This is why you watch correlated markets. You want to see congruency, as I've been explaining with the stock indices, correct? Right? You want, or rather, silver and gold. You want to see congruency in the move. You want everything else confirming everything else, that it's a genuine move. It's not a bullshit move. And if you have a disconnect, you usually have a bullshit move. Okay, or at least it's a warning sign not to commit a lot of capital. So look at silver now, and this is why I told you not to rush into the gold longs, right? 1 second. Let me remove this. This is gold spot. And this is silver. So silver is already down 1.3%. All right, we are not doing so hot. So for people who jumped into gold, this is the futures, who jumped here, I told you that you're gonna have an initial reaction, reversal to pop the stops, and I told you that we very might see this go here or even here today, and then you might have a genuine move. Okay, so do you think that people are sweating that went long here? Are sweating now? Absolutely, they're sweating, because silver is also correcting lower and in a very powerful move for now. Okay, so this is why you don't trade momentum on news days, because often you have to. Well, you can, but realize that it's usually first move and second move, they're traps. They're market makers making. Because the liquidity thins out, you can commit less capital to punch through the existing orders, protecting certain levels. So the market makers grab the stop losses, and then they take profit, and then they go the other way. And that's what you've seen on Dixie, on the dollar index. Essentially, just that was just a blatant example that so within the 5 minutes, but same thing can happen within 2 to 3 hours on gold and silver. So that's why you have to be patient. You have to sit on your hands, and this is why it was important to watch the confirmation of what's happening with the correlated markets. And because I saw that the silver was down while gold was slightly up, there was a disconnect. When there's a disconnect, it's a red flag. If it's a red flag, it's like you go on a first date, and the person on the first date says some crazy shit. That's a red flag, right? You might still sleep with them, you might have after a couple of drinks, but at least you have to be aware that you got fucking there's something off, right? So you don't want to go gold long before you start seeing turnaround. Plus, again, if Aussie Kiwi are going down against the dollar CAD is rallying, about to take out these highs here, then the dollar move is showing you that the dollar is strengthening against the currencies. So it's not the time to go long gold either. Okay, so this is why, not yet at least. So if you really want to go long gold, either buy range low right here, or if you're like me, I wanna see the stops be popped here. Essentially, price goes down, and then the market makers that drove the price down to stop out the longs who got trapped right here. See, this was the level. So all of people who bought it right here, they're all trapped now, and their stop losses are where? They're here and here. So 1 second, sorry. So I want to see a price market makers essentially drive the price down here, and wick me in. So this is the next level at the 50% retracement, and then because it's Friday, they will close their short positions that they pushed the market down, and this will provide the bounce for gold. Consequently, you can wait. If we start rallying, I would wait for this pullback, before I would buy it. Okay, so you buy it right here. This would be my two scenarios for gold. Right now, you're in the middle of the range. The price is at equilibrium. Okay, there is no you're not there's no edge to be had to be buying here because it can easily go here, take out these stops, and it can, if you weren't going to be shorting here, it can easily go up now as well. So at the 50% in the middle of the range is a stay away zone. So if you want to trade the range, if you see, for example, if we take out this candle, we go up, and then you have inverted hammer, something like this, with a continuation down because it's Friday and it's going to be profit taking. It's not going to be a trending day, right? Then you can do this essentially as well. So that's the third scenario. But I don't want to. I'm not a big range trader. I prefer when shit starts moving because it's just easier. So I can wait for this, or wait for this, okay? Because the trend is still up. So these are my primary scenarios. But you can trade the pop and then reversion into the range again. That's a valid trade as well. Okay, and again, we have stock market open in 23 minutes, so yeah, so there's still time to. This is just the beginning of the day. All right, so all right, let's see what's happening. That's my gold scenarios. This is my NAS scenario, and again, this is I'm just sitting and waiting because most people who think what trading is them being in a casino and they spin the wheel. This is why a lot of people like scalping, because it's like spinning the wheel every minute. You're at the roulette, craps table, whatever. Action, 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 and this is not TikTok, okay? And if you have TikTok brain, you're gonna be losing money. You need to be very calm, very collected, and very pull back. You need to be chill and wait for the markets to come to you, and you take the trade when it's time to take a trade, and not take a trade because you are bored. And most people take trades because they're bored, because they came to work, they're at their trading desk, and they need to fucking take trades because this is what workers' mentality has been instilled into us by our school system, right? You're at the factory, fucking with the whistle and the brakes and this and that, blah blah blah, the whole industrial age schooling system, right? Instead, here, you don't have to do shit. You just sit and wait. You wait for a high probability to come to you, and then you take it. The high probability trades for me today are on NASDAQ, the 50% retracement retest of the breakout. And like I've explained to you on the 50-minute gold as an analogy, right? And then, which was here, initial one at least. This was the pop, right? And then with gold, we're in the middle of this consolidation. There's nothing to do there either. Whether it's cash gold or futures, doesn't matter. So we're smack in the middle of the range right now. I'm not going to be committing my capital. Again, if you're trading with, for $2, you just want to throw that money, you want to gamble, then go gamble. If you're trading large amounts of capital, you don't gamble, all right? You do what you're supposed to do as a trader and take high probability setups with probabilities stacked for you, not against you. This is sit on your hands and wait for more direction from the market. Market will reveal its hand at certain point. Your job is to wait and be patient until you see what market is doing properly, and not just buy into some whipsaw and essentially enrich market makers with your stop losses. Yeah, there are plenty of scalpers that are successful on our in the prop firm. So I don't have time to scalp and run multiple businesses. So for me and for my personality nowadays, I just find not scalping more of I day trade and I swing trade. I don't scalp very rarely. Only when it's like blatantly obvious opportunity. Once in a while, I'll do it, but very rarely. But yeah, again, most scalpers are okay, but you have to understand. Imagine you're a 16-year-old kid, and instead of me buying whatever your parents buying you or you buying yourself a slow car, you're at 16 years old. You're given F1 car, and good luck, right? So the F1 car requires so much concentration because how fast it goes that you won't be able to sustain that level of concentration for a very long time. That's what's grueling about doing these things because you can concentrate for 30 seconds, for a minute, for 5 minutes, maybe, but you won't be able to sustain that focus for an hour without teaching yourself how your brain is like a muscle, and you have to train your brain to be able to focus for that period of time, for a sustained period of time on that high level of focus. So most traders they go into scalping because they want action and not because they have a skill set that will enable them to make money scalping. Okay, which requires tremendous amount of focus. That's just the truth. So yeah, so higher time frames will give you less setups, but they will give you higher probability setups. And you're again, if you take one trade a day, that's excellent. You don't need to take multiple trades a day. Just make them. Again, if you're right, if you take one trade a day and it's high probability trade versus you taking seven trades and five of them are just plus minus plus minus plus minus plus minus. So what's the point? You've just wasted all this time, concentrated like well, you just generating fees for the brokers. You're not really doing anything, okay? And there are memes on the internet, plenty of them. The trader comes to an accountant after a whole year of trading. They took, 3 quadrillion trades and have $2.50 profit, to show for it, right? So why put yourself through the meat grinder? Again, as a novice trader, as an educational aspect, you can and should experiment. Sure. Just don't commit a lot of live capital towards it. Okay, you can play around, find what works for your personality. If you can, if you want to trade for an hour a day during certain hours, So there's a lot of scalpers who work from 8 o'clock in the morning New York time till 9:30 before even stocks open, and then they're done. So that's fine too. There's no wrong answer in trading if you make money. Okay, if you make money long term, then who cares? Is the easier. But like I've explained to you, most novice traders are attracted to scalping because it gives them a lot of emotional highs, and they get into the gambling state rather than trading state. And those are two different states. Because gambling state, you're excited, you're in the casino drinking, alcohol. You're excited, the ding 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 ding, the flashlights, the sounds. In the trader mindset, this is why I'm not super excited right now, because if I'm trading, my emotional state needs to be calm. And I'm actually forcing myself to be a little more excited because otherwise I'm just going to be sitting in the meditative Zen mode here, staring or I don't have to stare. I'll just set alerts, but I will not be animated and emotional, and it's the opposite of gambling. So you have to be calm, and when you're calm and your brain, you slow down. It's a meditative state, right? But if I'm going to be talking like this and slow, then nobody's going to be listening. So I'm trying to make it a little more exciting, but inside I have zero excitement right now, towards markets. And if you're excited, which again, you should be excited to, you should be passionate about learning to trade. But when you actually trade, you need to be calm. You need to meditate. That's why I tell everybody learn to meditate. And nobody wants to meditate. It's a pain in the ass and blah 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 blah. Wait, where's my video not showing? On 1 second, guys. On Discord. 1 second. I don't know why. All right. Not sure why my thing shut down on the Discord, but anyway. All right, so as you can see, there is zero direction right now. Zero direction. Market doesn't know what to do. So if market doesn't know what to do, what should you be doing? Is it showing you what it's doing? No. Is it revealing its hand to you? No. So stay the fuck out. Don't get. Otherwise, you're flipping a coin. 50% chance. Boom, 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 boom. That's not the way to make money. Then you can just put a monkey throwing darts randomly and hope that it makes you money, right? You don't even need to be present at the desk. You can just write a random 50% code generator and go long and short randomly at random times, and see how that works, right? So when the market is not revealing that there is some kind of edge to it, then don't force. A lot of traders also force their view onto the market. So they get into the trades because I have to be right, because fucking 12 years of schooling told me I have to be right or I'm an idiot, and all this fucking nonsense that we've been programmed with gets to run into our brain and forces us to make mistakes. And that's why most people lose money trading, because it's not about being right or wrong. It's about probabilities. It's about being patient and take trades when there are statistical edges with your setup during appropriate times. And they don't happen they don't happen every second. They don't. So you forcing your view on the market while market is not showing you that it's actually doing that is a recipe to lose a lot of money. Okay? Or in your case, a little amount of money. But we all lost money. We all blew accounts. We all went through that process. So don't feel bad. That's part of the learning curve. That's paying your tuition. Okay. So that's but again, your job is not to lose money. Yeah, you can have signals at 40. Somebody's asked, 40% probability and risk reward 2-to-1. Sure. Yeah, that if you have a system that works 40% of the time and 2-to-1 is what you do, then yeah, I do 1-to-1 most of the time. I do 1-to-1 with 60, 70, 80% probability on my statistics. And again, how do you know what's all that data? Because you have to keep a journal. Why do I keep telling everybody to keep a journal? For two reasons. Not only because it provides you statistics of what works, what doesn't work, and then you can make adjustments. It also forces you not to take shitty trades. Because if you have to input a trade into your journal, you have to take a picture, you have to write a little paragraph. Why did what's the setup? Why are you entering? What's the market condition? Something like that, right? A lot of people, they overtrade. They take subpar trades. So when you actually have to journal, it forces you to pause for a second, evaluate, do you really want to get into this trade, or are you fucking bored? It's like, when you're hungry. Are you really hungry, or you're just, you take a shit from your fridge because, you're bored, or you're passing by? Are you starving? Should you have that, whatever the hell you have to eat? Or are you starving? Or are you just, I want to munch on something because I want to munch on something. So if you want to munch on trading, you're going to be losing money. You're going to get fat, right? So but in reverse, you're gonna be moneyless, right? So if you want to stay healthy, you want to stay, you if you want to, if you have to identify what if what with trading with journaling rather, it will help you identify what type of trade this is truly is, because once you start writing out the why you taking this trade, why how it looks like, what's the market conditions, it takes a little while, it takes some time, so you actually think it through properly when you're putting them down on paper, well, not paper but digitally, right? But for the sake of the argument, what it prevents you from just randomly clicking, clackety clacking, and it's kind of like puts brakes on you, and that's very important because if you're not going to be doing that, chances are you're not going to know your statistical edges. You're not going to know which days you should be pressing more, less. So, for example, my best day is Thursday. Okay, so on Thursday I can go heavier size wise when I trade, because I know most of the time by Thursday I am dialed in. Okay, so I know my personality. That again reveals to me what kind of personality I have, right? So I need to be dialed in. It takes me a little while to warm up. And when I play tennis, same thing, by the way, right? Some people are the opposite, so they might be they come in on a Monday and they're super rested or whatever, and then on Monday they do well, but by the time of the Thursday they're tired, and that's when they shouldn't be taking heavy size trades or more. All right. So they have to assign probabilities to which days are better for work for them. And the only way you're going to find out about it is when you take hundreds and thousands, well, for you, at least 100 trades. And over time, or over 6 months, over months, you will start seeing patterns. Which days are good, which days are bad, what kind of setups work, what kind of setups don't work. When you're taking trades willy-nilly, you will start seeing evidence that you shouldn't be doing that, because you're constantly, most of the time, lose money on those trades. So it's gonna naturally teach you to pull back and stay cool, instead of just getting into subpar trades. All right. So we have 7 minutes till the open. So yeah, so 40% 2 to 1 is amazing because you still make money. So there are people who make they're 30% right, but risk to reward is enough for them. 3 to 1, they make money on that too. So it's not about the whole trading is not about like it is in what we've been taught in school. You don't have to be right even 50% of the time. You can be right 40% or 35% of the time. But when you're right, you make $5. When you're wrong, you lose $1, and that's fine, right? So, but for you to dial in that system and take it on a repeat, the similar setups over and over and over again, takes a little while for you to discover those things. So most people don't have the patience to do it, and they just willy-nilly do everything until they lose enough money to start doing it professionally. Okay, and be patient with everything. All right, so let's see. So I think with the stock market open right now, we're gonna start seeing real moves happen, because you had the initial pop in the risk, then dollar strength, and now we are gonna see the third move, which will reveal its hand. So let's see what we get. In 6 minutes, we're gonna have stock market open. After that, wait 5 minutes, 10 minutes for markets to digest, and you're gonna start seeing real move for the rest of the day, probably past that point. Okay. All right. Let me see where's the chat? Chat. There we go. All right, so we got 5 minutes. Been yapping for over an hour. Okay, let's wait. Well, nothing has changed, so I'm still waiting for a dip in Nasdaq for me to go long around the levels that I've explained. And if it doesn't happen, doesn't happen. Then I'll wait for another setup another day. All right. So, but this is my preferred setups. Gold, same thing. Like I've explained, I want to see a breakout one and then a pullback, which you'll get. You always get the pullbacks. When this thing was crashing, when this thing was going down, after so after this extended move up, you had the ending diagonal. All right, a pop retest, and and then move down. Right. So when this thing was going down, most people thought, okay, this is over. This thing will be keep crashing, crashing, crashing. This is all time high, and then you get a correction. Um, Markets move in waves, so just be patient and catch your wave. Okay. And once the wave gets overextended, you have to know that it's overextended, not just and act accordingly. You know, are you in the beginning of the move? Are you in the middle of the move? Or when you see something overextended, are you at the end of the move? Again, you never know 100%, but that's what makes trading, right? So it's your ability to read probabilities, and there's no certainty in trading. That's why it makes it so hard. It's not like you showed up to work, you do this for 8 hours a day, and somebody gives you money for it, okay? So here it's a lot more complicated. Otherwise, everybody would be just doing that, trading. But most people are forced to do some nasty, some shit they don't want to be doing. Standing and doing this is not fun. But that's all they know how to do. So, but they get a guaranteed check. Here, you get zero guarantees. All right, NASDAQ is still rolling. So that's nice. Come on, keep rolling. All right, 2 minutes. 2 minutes. We'll see what happens. But honestly, these are my two trades. I don't really see anything more interesting happening for me. You see a sea of red. Gold is a tiny. It's positive for the day, but in a very small manner. With everything else bloody red, right? There's no point for me. This is not a good time to go long here for me. So for me, I want a breakout retest continuation. I've been saying breakout retest continuations since January to February, and we've made a shit ton of money trading all of this until I left in end of February, and you got a correction. So for now, again, this is a range. Number one scenario, number two scenario, and if you want to trade the range, if you get a pop and a reversal with everything else going back, staying red, you have a candle like this. Then we take out the candle low. You put your stop here. You target this range low right here for a range type of trade. So these are my kind of top scenarios that I would want to see happen for me to trade. So for now, all right, let's see. We just had the market open. Okay. Markets are directionless, pretty much, slightly negative, obviously, but this is nothing. So no huge. There's no momentum trades to be had right now. Look how nasty this was. This was the prior news prior to the NFP high right here, right? We essentially popped the stops and we reversed. And I'll be very surprised if we don't take out this low just at least temporarily on the S&P minis, on the S&P. Just to people who are trapped here because their stop losses are against the lows, to just stop them, and then the price can do something, something else. All right, boys and girls, it's Friday. Like I said, I'm waiting for these two scenarios. I've spoken for an hour and a half, a little less, but hour 15 minutes. Waiting for this level and waiting for gold setups, as I've explained to you. On a short-term time frames on gold. Breakout out of this range continuation, this would be super nice to trade. All right. Hope it helps, guys. All right, guys. Yep. Thank you all. I'll be back Monday. Because it's NFP, don't commit too much capital. You want to trade, you will have that itch. You can scratch the itch, but trade 1/3 of the size. Just put in 1/3 of the size, okay? And that will help you tremendously. Another one is wherever you think you would, if you're going to want to enter a trade today, I'll give you a little trick. If you want to enter a trade today with whatever your stop loss is, instead of entering your trade, just put your entry at your stop loss. You put your entry at your stop loss, you'll make money today. All right? On that note, I'll see you Monday at 9:15 a.m. And 15 minutes prior to the open. You're probably going to see proper moves in all the markets now after we've had a little whipsaw. So it should follow for the next hour or two or three, or maybe the rest of the day, the moves that are going to reveal itself. Right now, there's still no momentum behind anything, so markets are unsure what the fuck to do. But maybe it's best to just stay out when the markets are unsure. You sure as shit are not sure, and you don't know. If markets don't know what the hell they're doing, you 100% shouldn't be trading in those type of markets. All right, boys and girls, enjoy the rest of the Friday. I'll see you all Monday. All right, cheers.